It's been interesting to watch. I've been covering Bitcoin now for 8 years, and adoption certainly has grown. And in this year, we've seen institutions like yours. I mean, I don't know whether you guys have actually bought any Bitcoin, but I certainly know that you're interested in it. We've certainly
I have some Bitcoin.
So we've certainly got a number of these big institutions now buying into that. It's still obviously a small proportion relative to gold, certainly relative to dollars, certainly relative to the global marketplace. However, how important is that institutional buy-in from a political perspective? Does it impact the policy decisions going forward, whether it's for Bitcoin or for any asset for that matter? Does the financial class have an impact on the decisions that are going to be made about these rules, as you say, are going to be really important going forward on which currencies and which storeholders of wealth get impacted? We certainly know from the 2008 crisis that they do. Wall Street's too big to fail situation was the defining moment of that event. Do we look at this coming moment and the decisions governments make from the perspective of who owns the assets and their influence, the lobbying power over those governments? Is that important? And in the case of Bitcoin, if it grows, does it become important?
Yeah, I think Bitcoin's greatest risk is its success. Because as it becomes more, right now, it's not such a big deal. And, fighting it is more of a big deal. And that's it, because it's not that big a deal. As it becomes a bigger deal and more of a threat, let's say people want to sell their bonds and they want to buy Bitcoin. And they want to do that in a bigger way, like buying gold or something in a bigger way. And then there's more transaction. They lose control over that. And that's an existential risk. So, yes, that's connected. The more we create savings in it, the more you might say, I'd rather have Bitcoin than the bond. Personally, I'd rather have Bitcoin than a bond. And then the more that happens, then it goes into Bitcoin and it doesn't go into credit, and then they lose control of it. So, yeah, that's a risk.
Yeah, so maybe there's a tipping point, right, where it's at the moment it's not something they worry about, because it's too small. It then gets greater demand, it gets more adoption, it becomes a threat. I suppose there's a point at which governments might get worried that it then passes to a point where they cannot control it anymore because it is so broadly held, and the influence of those asset holders is too strong. So at some point,
right. Watch the total. Total value of Bitcoin right now is a little over $1 trillion. Total value of bonds is about our bonds is U.S. dollar bonds, about $23 trillion, and so on. Not only watch the price, although in Bitcoin's case the demand follows the price. Watch the total values of those things, and as those, and plot it on a chart and watch those things and watch the flows. Because if you start to see that kind of thing, you could almost see, like the blow off and then that kind of reversal. Right now, just to put it in perspective, some other numbers, like there's a little over $1 trillion in Bitcoin. If for gold, if you take out central bank ownerships, because central banks won't own Bitcoin I don't believe, for various reasons that I can digress in, as an asset. And if you take out jewelry from gold, then you have a bit over $5 trillion. So if you were to look at it now, and you were to say what's a person who wants a diversification of those two things, it's about like 80-20 right now in the world. So that's something I'd watch too. But I think those things probably are going to rise relative to the bonds, and it would transpire that way. So you want to watch those numbers and see how those go.
Another thing I think that it's worth watching, and this is something, I don't know how much you've looked at it, but I would humbly suggest you do, is to look at the overwhelming amount of kind of Wild West, unhinged, relentless innovation that is happening around the crypto space, in many respects, to create, as close as they can get to it, a truly decentralized model that allows them to get around a lot of these constraints. It's not necessarily looking for something illegal, but it's to build a structure that is not dependent on, any of these controlling forces, be they, a bank or a government, right? And so the DeFi world, the decentralized finance world, it can be looked upon as this furious effort to build this. And so I just think that's a very important mix.
Yes, perhaps you could keep me informed of that. That sounds very important. Yes.
So with that in mind, you started talking about diversification and everything else. What are your recommendations? What does a person? I'm also interested in this. You started off talking about zero interest rates and sort of being the return on financial assets being driven down essentially close to zero. And I'm thinking, I'm a little older. You and I probably, it's not as big an issue for us, but I've got young daughters who are just leaving school, for whom the future of zero interest rates, on what they're going to be earning over the years is just highly unattractive and has all sorts of problems along the lines of what you're just talking about. What does a smart portfolio look like with that in mind, but also obviously the bigger, international hegemonic issues that you were talking about?
Well, I think the same thing. These things come across about once in a lifetime, and the problem with most people is if they didn't experience it, they don't understand it. I think it creates this environment. I would recommend to anybody who's interested, I put it on LinkedIn, my study of what's called the Changing World Order, and it goes back and it shows the patterns of there, because it's like if you were in the 20s, you're experiencing the 1920s and so on, and you cannot imagine what's ahead because it hadn't happened in your lifetime. The New World Order. So we're in a spot of the cycle. It's not just about interest rates. It's about the whole enchilada, and that could be financial, which has to do with taxes, and then trying to escape taxes, and then trying to control, and all of that dynamic. And then it has to do with conflicts between the left and the right and the capitalists and the socialists, and how they can be with each other. That affects the environment. And then it has to do with the changing world order in terms of China and the United States and so on. So your children will really, in order to understand what's likely to happen over the next 1, 2, 3, 4, 5 years, you really need to go back and study what happened in the 1930 to 45 period and so on and so forth. And so I'm not going to be able to summarize that here, but I did put that description out there for those who are interested, because you've got to be prepared for all of those possibilities.
It's rather grim, unfortunately, because those years weren't the brightest ones in human history.
Well, we don't realize how unbelievably lucky we were. I was born in 49, so 4 years after the United States had 80% of the world's money, because gold was the world's money. They had control of the world central the power, because they had nuclear weapons and they were dominant. And there was this wind, and that always happens. There's the cycle, and that always happens, and then you experience it. But if you go back to 1900, just a little bit earlier, and you look at, you would see that almost all wealth, just pick a country and say, I have a store of wealth. And is it stocks, bonds, the currency? Okay, it's destroyed in those years with not just the currency thing, but a combination of taxes and then conflicts over wealth and power and so many things. So think about if you're, instead of an American, you're a German or a Japanese. You got wiped out totally. You happen to be lucky if you were an American. But if you, let's say, if you're a Brit, you had some money, but it got taken away. Most of it got devalued or taken away. And so you've got to know those stories.